Breaking news, 41 cents. That's how much above Verizon's offer of $50 a share for AOL. That's what it's trading at right now, $50.41. The gobbling up began this morning when news broke that AOL was being eaten up by Verizon in a $4.4 billion cash deal. But had you been watching Countdown to the Closing Bell, I don't know, 5 months ago, you'd have known that Verizon had been circling AOL. I asked AOL CEO Tim Armstrong back then about merger rumors and whether Verizon might be a good fit for AOL. What is the deal with Verizon? The rumors have been rampant. Are you acquiring? Do you have a partnership? Are you talking to them about content deals? What?
So first, Verizon's a huge partner of ours in general. They're a partner with us here. We're the official media partner for CES, digital media partner for CES. And I'd say this: there's always rumors about AOL, and I would categorize the Verizon stuff as rumors because really what we're been about is about growing digital content companies, great at video, great at programmatic advertising, and really great at global content brands.
He had a poker face there. Very good, Tim. Another huge merger currently in the works as AT&T and DirecTV look to close their deal once the Justice Department and the FCC finish their review. The Wall Street Journal reporting today that sources close to the deal say it's unlikely to be blocked by regulators. So maybe they have smooth sailing, unlike Comcast and Time Warner Cable. Jennifer Fritzsche is Wells Fargo Securities telecom analyst. She's been looking at this all day. And Jason Abbruzzese is Mashable business reporter. He is joining me now. Right to you, Jennifer. The breaking news, really, when it comes down to it, because the AOL Verizon deal broke this morning, is that perhaps we will see an AT&T DirecTV merger. It won't be blocked by the Department of Justice. Do you think it has smooth sailing?
I do think it has smooth sailing. We've done a lot of checks in Washington, D.C., and it's a different kind of merger than the cable merger.
Sure.
I think it has a lot of synergies, but also a very good value proposition to the U.S. consumer.
Okay, but is there a stock that you like in this battle? Do you like AT&T? Do you like DirecTV? Is there one better? Because that's what we're trying to let our viewers know.
We've liked AT&T for a long time,
right.
And I think that AT&T, the synergy, the time not to bet against AT&T is when they're doing the mega deals. History has shown very good execution and synergy achievement. And remember, the synergy guidance they've given is only cost synergy. We think there's tremendous revenue synergies that will shed light on once they close the deal.
Okay, so that one we're moving aside because you say it'll close that deal. Let's get to AOL.
Yes.
Back again to you, right. Jennifer. The AOL Verizon. I get what Verizon gets out of it, content mobile. Just not sure what AOL gets beyond an escape hatch.
Well, I think AOL, if you look at the letter that Tim Armstrong sent internally that's been published on, I think, TechCrunch today, I think he says it. I think he talks about mobility being the future. I think the stat they've thrown out is that 80% of mobile or of consumer video eventually be watched over mobile. And they need that scale. They need those eyeballs. And Verizon gives them 100 million customers or 200 million eyeballs.
To Jason Abbruzzese, you looked at this and you said, what? Who's the genius in this deal?
I mean, Tim Armstrong is probably patting himself on the back, and he deserves to. A few years ago, after it split with Time Warner, people thought AOL, it might be it. Might be done. It had this legacy dial-up business that was going nowhere. That was a business that was eventually going to fade. It had a media business that wasn't really helping to stop the bleeding.
Do you know anybody who uses AOL?
Unfortunately, I probably know a couple, but nobody's buying AOL. It's only people who've had that business for years. But Armstrong came in, started going after businesses where he saw a future laid, and a big part of that was online video, particularly serving ads on online video. It's not the sexiest business. It's not producing great television. It's not doing these things that are very flashy, but it's a business that we've already seen has a lot of money heading toward it, and companies like Google and Facebook are also here too.
Well, listen, money is sexy, Jennifer. We certainly are in that business, but get right to it. Does AOL, Verizon, does that partnership spin off, say, for example, Huffington Post?
I think they do. I don't think Verizon's long-term goal is to own the content. I think they want to own the highway which the content's being delivered on, and we know wireless will play an important role. So those news stories wouldn't surprise me.
I'm being told the last person on earth using AOL is our floor trader at the New York Stock Exchange, Teddy Weisberg. My sister uses it too. I'm not being mean. I'm just saying, Jason, that he had to do that. Teddy, there, of course. Teddy, yeah, exactly.
Yeah.
I love it. Yeah. That says it all, doesn't it? My mother got rid of AOL and went with Gmail, but that's beyond the story. He's a genius, but when you look at the number, folks, $4.4 billion. AOL used to be valued at
around $350 billion after it acquired Time Warner Cable. As a standalone, it was more than $220 billion. So this was a company that, back in the day...
This is a fire sale, Jennifer, isn't it?
I think so. Verizon also, like AT&T, is known for doing good deals. I mean, $4.4 billion in additional cash. Remember, this is a company that has $113 billion in debt. It's not a needle mover for their financials in a negative way.
One word, and if we have to, we got to go. But if you have to figure out who's the next, you got to merge. Who is it, Jason?
It's Yahoo. I think they either have to make a big acquisition or somebody needs to come in and start buying up their pieces.
Jennifer, who has to merge next?
I think cable. I think cable has to look outside the box. Wireless.
Doesn't Comcast have to do a deal too? Jennifer?
I think that, they probably take some time given their recent foray, but I think wireless has to be a part of their strategy.
Well, now it's, still 41 cents above $50 a share, so Verizon got it on the nose. Great to have both of you. Jennifer Fritzsche, Wells Fargo Securities, telecom analyst, and Jason Abbruzzese, Mashable business reporter. Thank you very much.